Hi, everyone, and welcome to this episode of Money Moves. In this episode, I want to talk about the inflation numbers again that came out on Friday. Also, let's briefly talk about Ford's new electric pickup truck and are they the best player in the game currently? Then, of course, I'll go over each of my investing accounts, starting with Worthy Bonds, GroundFloor, Fundrise, M1 Retire, Higher Yield Savings, TSP, and then lastly, for my investments, I'll go over my options in Robinhood as well as Tastyworks. Then I'll go over my bi-weekly tracker. And of course, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning this AMG GT, or if you're just getting started on your financial journey, definitely like and subscribe. It comes standard with over 500 horsepower, but can reach up to over 700 in the most expensive version. Of course, it has that beautiful Mercedes interior, and they range from around $90,000 up to over $300,000. Welcome to the Portfolio Bulletin. Let's get started. So let's talk inflation a little bit more. Key inflation came out on Friday, and it rose 3.1% year over year. This was higher than expected, which continues to be the trend relating to inflation. The Fed continues to downplay this as well as the Treasury, saying that this is a short-term burst in spending, which is certainly potentially true, but of course we don't know for sure. And it's hard to say that when the government has printed so much money and basically handed it out to lots of individuals, and expecting them to sit on that money seems a little bit unlikely. They say inflation grew faster than expected at 3.1%, which was above the 2.9% expected, rising from 1.9% in March. The Fed considers 2% to be healthy and is committed to keeping inflation around this level, which is something they actually haven't been able to do for quite a while. Inflation numbers have been well below 2% for an extended period of time leading up to this quarter, where we've seen inflation well above 2%. Key indicators like food and energy jumped 3.6% from 0.6% in March. Analysts are saying inflation could get worse before it gets better, which of course makes sense based on the current trend, which we should expect bonds to continue to downtrend in price or uptrend in yield as we see inflation go higher. It doesn't make any sense to hold bonds that are extremely cheap, that offer little returns when inflation is exceeding those numbers. They say despite the inflation, there has been a slowdown in personal income, which declined 13.1%, which was less than the 14% expected. However, savings rates remain high at 14.9%, and consumer spending rose 0.5%. So based on that information, there's a little bit of conflicting data, but basically inflation is going up, savings rates are staying high, but disposable income is going down a little bit. The central bank continues to buy $120 billion worth of bonds every single month, which continues to maintain rates right around zero. As for the federal government and Joe Biden, they continue to say that inflation is actually a good sign. They're saying this means we have turned the tide and that people are more confident to start spending their money. They see inflation rates going to previous levels that we've seen before, jumping to 4.2% for CPI, which I did mention previously, which is the indicator that the Fed tries to keep above 2%. And based on the charts that I showed previously, they had been hovering well below 1% during the pandemic, and now they've jumped up to higher than 4%, which if you do a little math, averages around 2%, which is right at the target. Moving over to electric vehicles, Ford and GM are continuing to try to move into this space, and Ford announced their new electric pickup truck officially, and it looks pretty good to be honest. In terms of Ford versus GM, GM is saying they want to go all electric by 2035, and Ford said they expect 40% of their sales to be electric by 2030. Analysts are saying that Ford sales are booming, especially in the truck area, especially the F-150, which is by far their best-selling vehicle, and the best-selling truck in the United States. Despite the ongoing chip shortage, which really makes it difficult for them to produce as many as they would like to meet demand. They also say the Mach-E was very good, and in my opinion, a decent competitor to Tesla. In terms of share price, they say General Motors might outperform slightly in the near term based on Ford's overbought conditions, as Ford shares were up 9% on Wednesday, reaching levels not seen since 2016. You can see a pretty minorly detailed chart here for Ford, as we had a pretty decent spike up here in the last week, reaching levels that you can see were several years ago. And on a technical picture, this was a breakout above this longer-term downtrend line, which had been maintained for several years. In the long term, they say Ford is set up for a long-term upside, And not only because it's broken above that long-term downtrend line, but also because they're making very good cars and competing aggressively with GM and Tesla. Moving over to my investments, starting with worthy bonds, I did sell $1,000 worth of worthy bonds, and I did move this over to my trading accounts, and I'll explain why that was once we get to my Tastyworks portfolio. Otherwise, still holding this as kind of a secondary backup to my savings account, something that's relatively liquid but pays well above 1%, sitting at, as they currently give 5% compounded daily. As I mentioned before, Worthy is continuing to move into other asset classes, but right now you cannot buy any new bonds with them. Moving over to GroundFloor, I continue to grow this account, and so far I've received 9.8% on the notes that have been repaid, with $420 being repaid, which gives me a total earnings of $10.23. Looking at some of my investments here, you can see there are a few in default. This is the first one I've seen that says if the borrower does not pay off at maturity and the default is not cured within 30 days, they will proceed with the foreclosure. So I'm curious to see how that works out. That was updated here on the 25th, and I'll keep you updated on that one. Otherwise, looking at this other one that's currently in default, they say the borrower is continuing to work on the project and that plumbing and electrical are ongoing. I guess this seems like they are on the right track for getting this moved over to a longer term loan. And previously I mentioned other notes that were in default, which must have been paid back since these are the only two that I have and they are relatively recent. You can also see here 1.5% of my portfolio is currently in default with an expected rate of return for those of 12%. Moving over here to Fundrise, I continue to grow this account, getting up to over $2,200 in returns. Dividends year to date almost $200 and appreciation just under $160. Total revenue around $350 for this year so far. And I don't know if I mentioned it previously, but you can see the dividends that were paid out. I receive around $100 per quarter currently, which is pretty good considering that most of my money in Fundrise is in equity and not in dividend paying assets. If you choose the income model or a more balanced plan, you would get more money in dividends, but for me, this money is a long-term investment, and I do want to maximize the growth over time. Otherwise, no big changes here, continuing to maintain my $500,000 target by April of 2040. Moving over to my TSP account, which is my largest IRA as well as my largest holding, you can see it's currently at $81,000. You can see $34,000 here in the S&Ps and $35,000 here in the total stock market index. Very small holdings here in government securities as well as corporate debt. And you can see I did change my allocation here to where I'm not buying any more bonds. And all of my money here is going into the indices. And over the last 12 months, I've received around 43%, which is still very good. Moving over here to M1 Finance and my Retire account. Over the past month, I've done pretty well, up just under 1%, with around $30 in dividends earned. Big changes for me over the last 2 weeks. I sold out of Simon Property Group as well as Realty Income. And again, I'll talk about why that is when I get to my M1, when I get to my Tastyworks portfolio. Otherwise, I continue to hold several different REITs in here, and I still plan to hold individual shares within this account in small amounts. Otherwise, finance continues to do well as the outperformer, and telecom didn't do so well as AT&T separated from HBO as they sold off Warner Media, which led to a decline in their share price as well as a cut in their dividend. Moving over here to my higher yield savings account, you can see it's down quite a bit in terms of dollar value. And you can see that illustrated here in the last month. I sold right around $2,000 worth of holdings, and all of that money came out of the short-term government bonds that I was holding in this account. You can see they were completely sold and I don't hold them here anymore. Again, another thing I will address when I get over to my Tastyworks portfolio. Otherwise, over the last month, I had a gain of just over 1.5% or $225. Outperformers during that period, everything did pretty well except Realty Income, as well as the bank balance sheet, which did go down also. Surprisingly, bonds and midterm bonds were up a little bit. Also, I did add some Simon Property Group to this account. So I have Realty Income and Simon Property in this account, which to me are some of the strongest real estate holdings right now. Moving over to Robinhood, you can see I did close my GE position and I'm left with one put that I bought as protection, which is down $6, and I can't get out of it because there is no bid. So I continue to try to sell it for $1, but it's unlikely that I'll be able to sell it as GE is trading around $14. It's highly unlikely it's going to drop this far in a short amount of time. Of course, if it did, then I would be able to make some money on this, which would be cool. But again, as I said, pretty unlikely. Looking at SLB, USO, I have some bets on oil prices going higher, and I do expect that to be the trend. And then I have Simon Property Group, which I would like to be able to roll into a position here if possible. I don't think I'll be able to do it in this account. I do have enough buying power here to do it, but I don't really want to pay margin costs unless absolutely necessary. So I may or may not do this here or in my Tastyworks portfolio, but the idea is that I will roll this into a stock position eventually, even if I have to use margin. Also, I have Ford, very bullish on Ford, like I mentioned. Match Group, again, too big of a position. I do want to play silver in here, which you can actually buy in an account this size. And then Snap and Tattooed Chef, all good plays for a smaller account. Otherwise, down a little bit here over the past month, but that's because I was up so high in the middle of May, and I'm up a little bit over $500 in the past 3 months. Still doing very good on the year, up 73%. Of course, it's pretty hard to lose money in the market that we've had, but continuing to do pretty well here in Robinhood. Moving over into Tastyworks, you can see I've struggled quite a bit here in my larger account. I'm building some strategies here for my IRA as well as for my individual account, as well as my taxable account. Both down pretty substantially. My IRA is down just slightly actually from $12,000, which is what I put in here. But my individual account you can see is down almost $5,000, which is kind of annoying, but I do think I have a strategy to be able to bring this account back up to where it should be in terms of value. In terms of strategies, I'm going to try to roll futures contracts using the wheel strategy. We'll see how that plays out. Currently neutral on bonds, and I have a poor man's covered call on Apple stock, which has been going down here recently. But talking about the things that I wanted to mention, you can see I do have a short-term government bonds position here. This is actually the money from my higher yield savings account, and I was actually able to buy just over $6,000 worth or 100 shares. But in terms of capital required, it was only $3,000 of my account to buy this. So essentially, I'm magnifying the amount of dividends I'm going to receive from this with very low risk, because this is a margin account and it allows me to hold these shares without putting up the full amount of capital. Otherwise, I'm using strategies to basically get into positions like AMD, Boeing, Disney, and Lululemon, and try to roll into these positions at cheaper prices than when I would buy them if I was just buying the stock and holding it. And then I'll try to sell calls against these positions if I get assigned, or just roll the puts out in time and wait for the stock to rally. So far, Peloton is looking like my largest loser, as it has rallied pretty dramatically, and as long as we see a return back to the averages, I should see a small profit and be able to get out of this position here in the next week or two. If you want a more detailed look at my options portfolio, I will be doing deeper dives into individual positions as well as my overall portfolio thesis next week. Finishing up here with my bi-weekly tracker, you can see stocks were up a little bit this week. Most of my gains here in my trading account was actually cash that I added to the positions, and I was basically flat over the last 2 weeks. REITs continuing to uptrend. Some of this was cash added. And then you can see a decrease here in bonds. So this is the sale in worthy bonds as well as the short-term government bonds that I sold in my higher yield savings account. But really, I bought equivalent, if not greater amount of bonds here in my trading accounts. I'm just not quite sure how I want to display that yet, because if I count this money here in trading as well as in bonds, then I'm double counting that money. So we'll see how that goes. But really, bonds here were flat and trading here was flat as well. This is just a movement of money. Lending Club continues to trend down. Cash trending up a little bit, which is actually kind of what I need to do as I have a larger purchase coming up in a couple of months. So I am saving up for that a little bit just to reduce the disruption to my current savings plan. Otherwise, a little bit of a gain here over the past 2 weeks, just under 2.5%, and making a new all-time high in terms of total dollars invested across these different asset classes. If you like any of these platforms and you are not members of them, definitely use the links in the description to sign up with them. This will get you some free stuff when you sign up with those platforms. Otherwise, let me know down in the comments section what you think of inflation, and will Ford be the best in the EV space over the long term? Definitely like and subscribe if you got any value out of this video. Definitely hit the bell so you don't miss out on any of my future individual stock videos or overall options portfolio overviews. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. So it's been announced that the Navy is continuing to see these UFOs, and they seem to be swarming Navy ships, as they can see large numbers of them on their radar pictures. And it seems like we are seeing an increase in these weird, strange sightings. It's definitely worth taking a look at, maybe doing a little bit of research to see what's been seen before and what these could potentially be. Are these anomalies in sensors, or are these truly unknown crafts? Or maybe our enemies are way further ahead of us than we possibly think they are. Let me know down in the comment section what you think of these acknowledgments of UFOs by the federal government. Are they aliens or just crafts that we don't know anything about? Definitely like and subscribe before you go, and have a great day.